Are you planning on moving your career to a strategic and policy-making position, or perhaps to the C-suite executive level? If that is the case, then you need to start thinking from a strategic perspective. For you to influence the policy of an organization, to shape the vision and align culture of an organization, a strategic mindset is imperative. Welcome to the Institute of Leadership and Strategy and to our executive certification in strategy. This course will tremendously increase your value, impact, and managerial career and prepare you for senior leadership roles. For 10 weeks, you will interact with captains of industry and key strategy experts to develop skills to lead organizations, to deliver on strategy, and to achieve exponential growth. You will understand strategy at the corporate, business, and functional levels and acquire skills in strategic planning, strategy formulation, and strategy execution. Sign up for our next cohort and join the over 500 managers and professionals who have gone through our executive strategy development. The course runs for 10 weekends with in-person and virtual options. We look forward to holding great conversations with you as experienced strategy experts and facilitators share deep corporate insights on business strategy with you. See you in our next session.
All right, good afternoon, ladies and gentlemen, and to all our distinguished listeners who are joining us on this call this afternoon. It is an honor to welcome you all to this high impact webinar, which is brought to you by the Institute of Leadership and Strategy. And this afternoon, we'll be discussing a subject that sits at the heart of every winning organization, which is financial analysis as a tool for strategic decision making. So I am Iraja AJ Klein, and I'll be your moderator for this session. We would want to get interactive with all our listeners on the call this afternoon. And so we want to kindly ask that you indicate your name and where you're joining us from in the comment section. And so quickly, as usual of us, we would always want to get interactive with our listeners and then our guests on the call. And so you want to drop your name and then where you're joining us from in the comment section, and we'll take them as the session goes on. All right, so I want to get into the business for today. And we all know that in our business environment today, instinct and experience alone is not enough. And leaders who win are leaders who decide with data. And every strategic choice, whether it's market expansion, cost optimization, investments, pricing, and many other business decisions we make, is either strengthened or weakened by the depth of financial insights behind it. And this is where financial analysis becomes not just an accounting function, but a strategic leadership tool. And so this afternoon, we are privileged to learn from an exceptional financial professional who sits at decision-making table and understands how numbers translate into growth, profitability, and sustainable business decision. With her rich experience in corporate finance and strategic advisory, she will help us bridge the gap between financial data and informed executive action. And so as managers, as executives, and as professionals who are joining the call this afternoon, this session is designed to challenge how we see financial information, not just as reports, but as intelligence for competitive advantage. And so on behalf of the Institute of Leadership and Strategy, we want to officially welcome you all once again to this afternoon's webinar, which has the topic Financial Analysis as a Tool for Strategic Decision Making. And so let's all prepare to connect the numbers to the strategy. All right, so but before I bring our speaker in, I would want to give us a few ground rules before we take our speaker's presentation. And so, whilst our speaker will be giving her presentation, we would want to, any questions we have, any contributions we have, we want to drop them in the comment section. Probably as she presents, we want to have any add-ons, any questions, any contributions. You want to drop them in the comment section. And right after she's done with her presentation, I'll engage her with your questions, your comments, and contributions. And so let's try to make this webinar very interactive, and so that we all live here taking a few things to thrive in our various organizations and fields. And so we want to go by this ground rule and then make this webinar very educative. All right, so I'll read her profile and then I hand over to her. All right, so our speaker, as we advertised, is in the person of Grace Awochi. She is a finance professional with 16 plus years experience in various industries. Her experiences include financial management, audit accounting, procurement project finance, business development, internal control risk management, and corporate governance. Grace started her career in 2009 with PricewaterhouseCoopers, working in Ghana and Liberia. Due to her exceptional working ethics, she was ranked as a high performer throughout her career in PwC. She currently serves as the Chief Finance Officer for the Bank Hospital and part of the executive management team. Prior to joining the Bank Hospital in 2022, she worked as the Chief Finance Officer of Veolia Ghana Limited, a multinational company providing services to the mining industry. In both organizations, she has served as the first Chief Finance Officer, therefore being the pace setter in establishing the finance and supply chain departments of the companies. Grace has also worked in key positions at Gold Key Properties Limited, a premier real estate company in Ghana. She has strong strategic financial planning skills and an ability to liaise with various stakeholders to maximize shareholder value. Grace is excellent in providing coaching and mentoring to other young finance professionals, both within and outside her organization. She loves to play tennis during her weekends to support her wellness. Grace holds a Bachelor of Commerce degree from the University of Cape Coast and an MBA in Finance from the University of Ghana, Legon. She is a fellow of the Association of Certified Chartered Accountants UK, a member of ICA Ghana, and a member of the Institute of Directors Ghana. She is a proud old student of Wesley Girls High School, Cape Coast. And so, ladies and gentlemen, our facilitator for this evening's discussion, she's in the person of Grace Awochi. Good evening, madam, and you're welcome.
Hello. So, good afternoon, good evening, everyone. And thank you, Roger, for the introduction. Again, thank you to the Institute of Leadership and Strategy for always giving us the opportunity to share our knowledge and experiences with other people. I'm certain that on this call, on this webinar today, there are likely to be people working in diverse organizations at different levels, some in finance, some in marketing, some in HR, some in operations. But across all of these functions that we may play in our role, as Irajua indicated in the beginning, a core of it is the finances, the numbers, how our activities impact numbers and how these numbers can be used to translate into decision making. I would do justice and use 30 minutes to be able to summarize and share in the topic, the financial analysis as a tool for decision making. And I hope that at the end of the day, we'll be able to have a lot of takeaways from this interaction. So my presentation would cover 4 areas: a bit of an introduction, delving into the topic, the importance of financial analysis, and conclusion. Then we'll have a forum to be able to have some questions asked, and then we'll interact subsequently. In terms of my introduction, I just wanted to set the tone with strategy. Why is strategy even important in the first place for any organization? For a company to be able to create value and be successful, there's a need for the company to be able to put together certain strategies. And these strategies are important because it helps to create value for the organization and its stakeholders. Stakeholders are internal stakeholders, external stakeholders such as customers, shareholders, employees, and the like. At the core of these strategies are decisions that harbor around what kind of market do we want to go into? What kind of product do we want to offer our customers? What kind of pricing model do we want to um, 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 go by in order to ensure customer satisfaction and retention? How do we even allocate resources? We all know that resources are very limited across organizations. So consistently, business leaders are required to make decisions, and these decisions are critical to be able to ensure the survival of the organization. Hence, the need for financial analysis, because everything comes down to what does the numbers tell us before decisions are made. Financial analysis, therefore, is looking at evaluating a company's financial health and performance. It could also be looking at evaluating a particular market to understand whether the market is doing well or not doing well. We can look into a product to be able to analyze, perform financial analysis on a particular product to see whether the product is selling on the market. Do we make decisions to continue to expand or to stop? Financial analysis, therefore, does not look at just reviewing the accounting numbers, but you're looking at both quantitative and qualitative information that are available within the organization to be able to determine whether this decision is viable and the potential to continue or to discontinue certain decisions. A typical company would have the financial statement, which is very common knowledge for members of the company. If the accounting team will say, we have auditors around, we are doing a financial, we are having auditors carry out audit of our financial statement. Beyond that financial statement, there are varied financial information that are available to the organization to aid in making these strategic decisions, where the strategic decision will lead to the path or the direction that the company wants to take. So typically, we have the statement of financial statement, which is the common financial information that people know and that is analyzed. The financial statement comprises of the balance sheet, it comprises of this income statement, statement of cash flow, statement of changes in equity. In a snapshot, for listeners that are not in the finance space or not working in the finance department, what does the statement of financial position or balance sheet, what does it mean? Once you pick the financial statement of the company, one of the first things you will see is the balance sheet, which summarizes the assets that the organization has and the related liabilities. And the importance of this is to be able to tell whether the organization is liquid or not liquid, thereby saying that is the organization have enough cash? Is it having enough resources to be able to continue in the next year, in the subsequent years? We also look at the income statement, which is reviews the revenue and the expenses over a period. And this helps to determine the profitability of the organization. We have statement of cash flow or cash flow statement that looks at the inflows and outflows of cash and helps us to gauge the cash liquidity of the organization. Then we have the statement of changes in equity that focuses on interaction between the organization and the shareholders. So in a snapshot, I have some template of how statement of financial position, statement of comprehensive income looks like. So in the statement of financial position, you have your assets, which is grouped into non-current assets and current assets. You have your liabilities, which is also grouped into non-current liabilities and current liabilities. Then equity, which talks about the relationship between the organization and the shareholders. A review of this at a glance for financial analysis purpose, there are so many things that can speak or tell the story about the type of organization that it is, which in my subsequent slide I would share. The statement of comprehensive income or income statement looks at the revenue of the organization and the various expenses. So you have cost of sales, which is the direct expenses that are incurred to generate the revenue. You have personnel expenses, you have admin expenses, you have depreciation and amortization. And then we are able to tell whether the business is profitable or not, whether it made a loss or profit, before you also look at your taxes, whether taxes are applicable or not. The statement of cash flow has three components. We have the operating expenses, cash flow from your operating activities, the revenue you generated, the expenses, your profitability, your purchase of inventory, movement between the previous year and the current year. We also look at cash flow from investing activities. How did you spend your cash? Did you buy new equipment? Are all captured under the cash flow from investing activities. We also look at cash flow from financing activities. We're looking at, did the shareholder introduce new capital? Did we borrow money from the bank? All of that is also captured under the cash flow from financing activities. And yes, for various stakeholders, when they pick the financial statement, a lot of financial analysis are done, and that can help in making decisions concerning the organization. Statement of changes in equity, as I earlier mentioned, it looks at the interaction between the organization and the shareholder. Aside the financial statement, there are various financial information that are stored by every organization. So you're looking at data on revenue, you're looking at data on expenses, you're looking at your various annual and quarterly budgets and forecasts, that information that are available. And all of this are put together to help us in doing the analysis that is required before strategic decisions are made. So the various stakeholders that make these strategic decisions, you can look at the board of directors. The board of directors are the people at the helm of affairs of the organization. And one of the key functions of the board is to determine the organization's vision and mission, establishing its purpose, and setting the long-term goals that would ensure the survival of the organization. And in order for the board to function in its role, a lot of financial analysis and oversight is required of them. So typically, boards meet quarterly, and at these board meetings, either at the main board or the finance subcommittee, their quarterly review of financial information. So the easier one is the management accounts that management will present at the board meeting. That management account will comprise the income statements, the balance sheet, the cash flow, and these are analyzed on a quarterly basis to determine whether the organization is achieving its target or annual budget that have been set. Do we have to change the strategy? Do we have to invest in new areas? These decisions are made at the board level following the review of these financial information. Again, decisions across research and development into new products or existing products, decisions to be made around opening a new branch or to close an existing one will be determined from the profitability analysis that are done for these. For example, if it is a bank wants to open a new branch, the board will not just approve for a branch to be opened. You're saying that you don't have a presence in the northern part of the country, so you want to open a branch. The board will not just approve for you to open a branch. You have to do the financial analysis and show the profitability and the value that branch opening would add to the existing business before such a decision will be made. At the management level, the CEO, the CFO, on a monthly basis, in some organizations, weekly, are reviewing the financial, the P&L, the departmental analysis, reviewing costs to be able to make decisions and determine the trends, the risk and opportunities that are available to the organization. Another key area under management, like a marketing manager or a marketing director, you want to go into a new industry, you want to go into a new market, you have to be able to understand your numbers. So this is not just understanding of numbers is not just meant for the CEO and the CFO. A marketing manager before or marketing director, before you do your analysis and present to the board that you want to enter into a new market, you want to promote a new product, you should understand your numbers. You should understand your numbers and be able to make the decisions. Potential investors or lenders, likewise, potential investors and lenders, likewise. Sorry, just a second. Sorry, I understand my slide is not moving. Okay. So for to continue, for potential investors or lenders, for example, before a decision is made into by the bank, for example, if a company applies to the bank for a loan, before the loan is granted, the bank will perform certain financial analysis on the organization before the loan is offered. If a business is seeking a new investor, the investor will definitely analyze the financial information of the organization before such a decision to invest or not to invest will be made. The types of or methods of financial analysis, there are different analysis that can be performed on an organization. We have the ratio analysis, we have trend analysis, we have comparative analysis, we have scenario sensitivity analysis. And depending on the purpose or the type of decision that needs to be made, different types of ratios are carried out, different types of analysis are done. Under the ratio analysis, the organization, we're looking at using the financial statement to calculate certain types of ratios, such as profitability ratio, liquidity ratio, financial leverage ratios. Profitability ratio will typically be looking at your income statement to determine whether the company is profitable. So if you pick in your revenue, you pick in your cost of sales, you want to know what type of margins are we generating from product A compared to product B? What type of net profit margins are we also generating across our different products, across our different services? So profitability helps us to be able to determine whether the company is able to generate profit as a result of its activities. We're also looking at return on investment. So before a decision is made to enter into a new market, to produce a new product, you want to analyze what is the return on the asset to the business. So if we invest money into this equipment, what revenue is it going to generate? And what will be the return on that investment to the shareholder? We're also looking at liquidity ratios, which is a measure of our ability to be able to honor our obligations when they fall due. So typically, you're looking at your current ratio, your quick ratio. It tells you that if today your suppliers are coming to you Are you able to honor your obligation to your suppliers, or you have to go and fall on the shareholder, or you are not able to honor these obligations, which can lead into liquidation, insolvency, and all of that. Financial leverage ratios can also be performed, which is one that is very critical for lenders and investors. So before they make a decision to invest in you as a business, or a bank make a decision to be able to lend you money, they will carry out your debt to equity ratio, they will carry out your interest coverage ratio to be able to determine your ability to be able to pay interest that will be due on the loan, or your ability to be able to pay back principals and all of that. Trend analysis are very key for marketing. For example, the marketing department. You want to be able to understand the various products that you are selling, to know the revenues that are generated across the products over a certain period. So it's comparing financial data over multiple periods to identify patterns and trends. And this helps to be able to determine whether product A is doing well year on year, or product A's performance is dropping, and what are the decisions that needs to be made around the product. Is market A performing as much as market B is performing? If the trend is showing that it's not performing, revenue is dropping, profitability is dropping, then decisions would have to be made across the market. Comparative analysis are also done by key industry experts to determine whether Bank A is performing better than Bank B. If companies are listed on the stock exchange, there are a lot of comparative analysis that are done by stakeholders to be able to determine whether I should go and buy shares in Carl Bank, or I should go and buy shares in Ghana Commercial Bank. To be able to make these decisions, comparative analysis are done to benchmark against competitors and industry peers. We also have scenario and sensitivity analysis that look at your forecasting, different assumptions, changing scenarios to see if decisions that we are going to make would end in being profitable or not. For the sake of time, just a snapshot, calculations and an analysis and how decisions can be made. I've used an example of a company, XYZ Limited, where I'm showing here the income statement of XYZ Limited, comparing the 2 years, 2023 and 2024. So for example, revenue for 2023 for XYZ was 14.4 million, is moved to 18 million in 2024. Our cost of sales have increased, our gross profit has increased, our personnel expenses have increased from a 3.7 approximately million to 4.5 million. Our depreciation and amortization have increased, and we now have a new line called interest expense, which we didn't have in 2023. A key analysis that can be done for decision making by an investor will be, is this business a profitable business? So one, if you look at profit before tax, the company made a 1.2 million profit before tax in 2023, and in 2024, the profit has increased from 1.2 to 1.75. On the face of this is a profitable business. So this is an example of a financial analysis being made to determine whether an investor wants to invest in the business. So typically on the ratios, we have gross profit margin. So I've done the calculations, and we've seen here in 2023, the company achieved a 68% gross margin, and in 2024 is increased to a 70%. So clearly this business is a profitable business. Net profit margin has increased from 6% in 2023 to 7% in 2024. So clearly the bottom line is expressing that the business is a profitable business. On the other side, there's a return on asset ratio, which is showing a dip. And the dip can mean a lot of factors. It can be one, we've invested into a new business, a new equipment, but it's going to take time for that business to be able to generate a lot of revenue. And so that can be an indication of a dip in the return on asset ratio for the organization. On the balance sheet, also looking at some high-level ratios that are done to determine whether this business is viable to invest in or not. We have liquidity ratios and financial leverage ratios. Liquidity ratio, you are looking at the current ratio, which is a measure of our ability to be able to pay our liabilities when they fall due quickly. 2023, the ratio was 2.78. 2024 is 2.94. This is highly a very liquid organization. Quick ratio is looking at your ability to still pay your liabilities, but it excludes inventory. Inventory is part of our assets because we've invested in them, we've purchased. Because we've purchased inventory, they are in our stores. And because they're in our stores, it's not very liquid to sell if you don't have customers. So under quick ratio, this inventory is taken out to be able to determine how quickly can we pay our suppliers. Leverage, financial leverage ratio looks at the debt to equity, it looks at interest coverage ratio. So here, under the financial leverage ratio, 2023, we didn't have any interest coverage ratio. But 2024, we have, because the company went in for a bank loan. And so if you see here, we didn't have any loan in 2023, but in 2024, we've gone for a loan. And that is an indication that there's an interest to be paid and the ability to be able to pay that is computed. Erajua, can you confirm if my screen is moving and I'm audible enough? Hello, Erajua. Listeners, I wanted confirmation if I'm audible enough.
Oh. All right. So your slides was not changing, but it is now. So, but we can hear you.
Wow.
So I think it's
My
on the
apologies, because
yes.
I'm moving them on my side. I'm wondering why. Okay.
Yeah, but it's on the XYZ Limited slide now.
Okay.
All right. So as and when there's a mistake, we will prompt you.
Okay.
Thank you.
All right. My apologies for the IT hitches. Okay. So another example too is on the trend analysis. I think I mentioned is one of the tools that are used in financial analysis. So XYZ has different products. It has product A, product B, product C, product D. For 2024, it budgeted to generate a 16.7 million revenue. Actual revenue for the year is showing 18 million. However, not all the products achieved its budgetary targets. So in financial analysis, this would help us to determine which product is doing well and we need to focus a lot more on. So for example, product A, we had a budget of 4.2 million. We've achieved an actual of 5.3, where a 26.2% positive variance has been realized. When it comes to product B, we targeted to do 4 million, we've done 3.2. The financial analysis here would help us to determine, to go deeper into what is happening to product B. Do we have a competitive product on the market that is taking away our market share? What do we have to do differently for this product? Or do we drop this product and focus on product A to generate more revenue? Is there potential to grow product A further? Product C also generated 2.8 compared to 3 million, also having a negative variance of 6.7. So this analysis not just done by the head of finance or the CFO or the finance manager, the marketing manager is equally interested in the performance of the various products to be able to make decisions going forward. You can also do financial analysis to compare year on year. So for example, product A, we're seeing here that it did 3.8 million 2023, now has done 5.3, having a positive variance of 39.5. And this trend analysis would help make very informed decisions about what the business should focus on and what it should drop in terms of its products lines. This slide is a pictorial view once the analysis is done. So how does these financial analysis help us? From the examples that I've provided, I indicated that decisions ought to be made daily, annually for organizations. You have organizations that will put together a 3 to 5 year strategic plan, but these plans are broken down into annual budgets, all the activities we want to do, the new products we want to have on the market, the new market areas that we want to target. All of this are translated into numbers, and these are analyzed to be able to make decisions around assessing the performance of the organization, assessing performance internally year on year, comparing the financial status of the organization to peers and industry standards. It also helps us to be able to forecast future performance and take decisions based on the analysis that have been done. It also helps with budgetary allocation. You have $10 million available. What kind of budget allocation do we have to do? You need to be able to go through your scenario planning, your analysis to be able to make a decision to go into investing in equipment A or invest in equipment B. Financial analysis also help us to identify the strengths and weaknesses in our own operations, in our various product lines or service lines, and helps us to be able to make investment decisions into the product or services or markets that we want to enter into. Again, financial analysis helps in risk management decisions because it helps to be able to, if you're a company and you want to be able to grow, expand, and you want to, for example, some organization want to buy into other businesses. Before that company can buy into that business, it has to perform financial analysis before such a decision is made. There are various stakeholders or user groups that perform financial analysis. One is management, that has been explained. So operational performance, you want to be able to determine whether you're operating efficiently. You're going through your budget analysis to be able to perform resource allocation, monitor performance, and all of that. You have your competitors that use your financial information to be able to take advantage of the gaps that you have to be able to win over you in terms of identifying competitive advantages and guide them in their own strategic plans. You have creditors and lenders that also review your financial statements to be able to tell whether a loan should be given you or not given you based on the financial information that you have. Your customers, your suppliers are also, especially suppliers, some critical suppliers are dependent on your ability to continue in the long term. So they're also interested in analyzing your financial information to be able to know how they can also support you and the kind of credit terms that can be provided you. Beyond these four that I've mentioned, we also have investors and potential investors, people who want to invest into your business. Even labor unions do financial analysis on organizations to be able to determine the wage negotiations and benefits that they will come and pursue for their members. You also have the government also analyzing, like a GRA would analyze your financial information and all of that to make decisions that are affecting you as organization.
Hi, Grace. Kindly check your slides again, please.
Wow. My slides are moving on my side. Is it showing now?
No, we are not on the current slide you are speaking to.
Is it showing?
Yes, please.
Wow. Okay. So maybe because it wasn't showing, just to, in conclusion, just to touch a bit on this slide, which is very important. Um, the financial analysis as a tool for strategic decision making. These various stakeholders use them in making decisions revolving around the company. So the company's management would analyze the financial information to be able to determine resource allocation, monitor performance of the various product services departments that they have, and then also to be able to use that as a measure to make decisions around operational efficiencies. How do we improve on our gross margin? Do we have to identify a new supplier? Do we have to cut down costs in this particular area? Before you can do that, it means that you would have analyzed the financial information that are available to you, like doing your budget analysis, you're doing your cash flow analysis, efficiency analysis. Your competitors also make strategic decisions about you as an organization to be able to know whether they can have a competitive advantage over you. Your creditors and your lenders equally make key strategic decisions about the company using their financial information. So for a bank to offer you a loan, they would have performed your profitability, your liquidity, your financial leverage ratios would have been performed to be able to understand whether the loan, you are credit worthy enough for them to offer you the loan that you need to be able to expand your business. Your customers and suppliers equally, especially your suppliers, also analyze your finances to make decisions in terms of giving you more credit terms, giving you flexible payment terms in that manner. In my conclusion, because of time, I've had to rush through this, and unfortunately, the slides, technology has also been against me. The future of financial analytics is huge, and the ability to leverage on data is quite critical for every organization. But what is most important is the quality of the data that are available to the organization to be able to make these decisions. There are various tools and software that are available, especially now with AI expanding. All of these are available to management, to the board of directors, to investors, to lenders, to be able to make informed decisions relating to an organization. I would pause here, and if there are any questions, we can be interactive now before we wrap up.
All right, thank you very much, Grace Aochi. And that was our speaker, Grace Aochi, a financial analyst and a transformational business leader. And so this session has just reminded us that financial data is not just numbers on paper, it is the language of business performance and the backbone of smart strategic decisions. And so once again, thank you very much, Grace Aochi. And before we switch over to our Q&A session, we want to take a quick ad, and so please don't go off. We'll be right back. We'll take an ad, and then we switch over to our Q&A sessions. All right, thank you.
Are you planning on moving your career to a strategic and policy-making position, or perhaps to the C-suite executive level? If that is the case, then you need to start thinking from a strategic perspective. For you to influence the policy of an organization, to shape the vision and align culture of an organization, a strategic mindset is imperative. Welcome to the Institute of Leadership and Strategy and to our executive certification in strategy. This course will tremendously increase your value, impact, and managerial career and prepare you for senior leadership roles. For 10 weeks, you will interact with captains of industry and key strategy experts to develop skills to lead organizations, to deliver on strategy, and to achieve exponential growth. You will understand strategy at the corporate, business, and functional levels and acquire skills in strategic planning, strategy formulation, and strategy execution. Sign up for our next cohort and join the over 500 managers and professionals who have gone through our executive strategy development. The course runs for 10 weekends with in-person and virtual options. We look forward to holding great conversations with you as experienced strategy experts and facilitators share deep corporate insights on business strategy with you. See you in our next session.
All right, so welcome back. And so we'll start with our Q&A session. And so if you have any questions, any contributions, you want to drop them in the comment section, and then we engage our facilitator with your questions. And so we can start taking our questions now. If you have any question at all, you can drop them in the comment section, and then we take them right away. Okay, so but Grace, whilst we wait for our listeners to drop their questions, we want to also take a closing remarks from you, trying to encourage our managers and professionals on the call who have been taking strategy, who have been making strategic decisions for organizations. And sometimes they may want to use just their experiences and overlook the financial analysis aspects, which gives us the data to make very good strategy decisions. So we want you to give us a closing remarks addressing this issue and what the way forward is for our managers and professionals on this call.
Okay. Thank you, Roger. I think traditionally, the finance, typically called accountants, were left at the back burner, and you would have the marketing team, the business development team being the forefront of decision making because they are on the market, they're interacting with customers and all of that. Now, finance or accounting has evolved and is more of financial analysis, critical in various decision making. For me, what I would say is that even if you're a marketing executive, you're HR executive, before decisions are made, for example, into entering a new product, there's a need to be able to understand, will this market generate value to the organization or not? And your determination of that value is based on some analysis that you've done. So gone were the days that decisions, you thinking of, oh, I'm not in the northern sector, so I want to open a branch. You don't just get up to open a branch because you don't want to burn cash. You want to sit with the head of finance, sit with the finance manager to be able to do a financial analysis to determine whether this move for a new branch would result in adding value, increasing our revenue, and also improving our bottom line or not. If that analysis hasn't been done, then you're going to be in trouble as a business. So for example, you're making profits in your existing business, so you have a lot of cash, and you just go out there and open a branch in the northern part when you don't have customers, a customer base that can support you to generate more revenue. What would happen is that your existing business is going to lose out because you have to pay for certain expenses, and little revenue or profitability will come from this new market that you've entered. So it's very crucial that every decision that are made have at the core of it, financial analysis, and the finance manager or head of finance is not left out in these decisions because we are the brain behind the numbers.
All right.
Yes.
All right. We are the brain behind the numbers, and that's an interesting one. All right. So we'll take our first question from our listeners, and our first question from Abdullah Musa. He's saying, in what form should the reports be in, visualizing it for stakeholders? In what form should the reports be in, visualizing it for stakeholders?
Okay. So Abdullah, for non-finance people, if you present a lot of numbers, they don't quite understand. So a finance person working with a marketing person, you can have diagrams, flow charts to be able to show the picture and tell the story behind the numbers. So you can have your Excel sheet, you can have your PowerPoint presentation, but an audience that is not having enough financial background, you want to do a lot of pictures and storytelling to be able to get them to appreciate the financial analysis and information that have been presented. So a lot of visualization would do for a non-finance team, especially the board.
Okay. All right. Thank you. I think there's another question from Abdullah himself again, which is quite an interesting one. He's saying that will you advise the use of AI in analyzing the reports for insights? Will you advise the use of AI?
So AI has come to help us to be able to work efficiently. But the reality on the ground is that it will not be able to tell you the story behind the numbers or the activities that have gone on in the organization or the planning that you want to do, the new market you want to enter into. So AI can help you, but it's not the final tool that you're going to use to analyze and provide insight to people. The finance team, I think earlier when I mentioned, are the brain behind the numbers. We tell the story. So we work with the various stakeholders to be able to tell the stories, the true stories, the risks, the opportunities, and all of that are pertaining to that decision that needs to be made.
All right. We hope that that answers Abdullah's question. We'll take another question from one of our listeners, which was sent via WhatsApp. It says that for managers without a finance background, what key financial indicators should they pay attention to when assessing the health of the organization? So I'll take the question again. It says, for managers without a finance background, what key financial indicators should they pay attention to when assessing the health of the organization?
A very key one for non-finance executives or managers is the profitability. Earlier when I mentioned that the financial statement in an organization for you at the manager level, you'll be privy to that information. So the financial statement comprising the income statement, the balance sheet, the statement of cash flow. When you pick the income statement, you can go to the bottom line of that income statement. Did the company make a profit or a loss? That is the first indicator of whether this business is profitable or not. Again, because the financial statement also looks at periods. So the financial statement will show you we are in 2025. Come end of December, our financials will show 2024 versus 2025. To be able to determine whether a business is doing or not, you can just look at the revenue, which is the top line. Did we increase our revenue? Once revenue increased, it means there's an indication that something good had happened to the organization. But beyond the revenue is also the expenses. So your ability to understand that profit at the bottom has changed from last year to this year is an indication that the business is doing well. Revenue is also an indication, but you have to go deeper into how the expenses are also performing in relation to these increases that are happening.
All right. We'll take another question from Cynthia. Cynthia says, can you recommend any useful software to aid the analysis? Can you recommend any useful software to aid the analysis? I guess Cynthia is trying to talk about the financial analysis. So she's saying that any useful software you can recommend for that.
So in my organization, we have the Power BI that we use. So what we've done is that our team, we have a team we've put together and we've been able to structure the kind of presentations that we want, variance analysis reports, trends, and all of that. And we are using Power BI to do that. Every week, we are able to determine the revenues that have come in into the business compared to budget, be able to tell what our P&L is looking like. So Power BI in our side of the world is an easier tool that is affordable, that one can get hold of to be able to use to analyze the financial details that they have.
Okay, all right. I hope that works for Cynthia. All right, so we'll move on to Ebenezer Mensah. He says, what are the practical importance of the cash flow statement? What are the practical importance of the cash flow statement?
Okay. I would want to quickly share, if sake of time.
Okay.
Can we see our screen because of the question on the cash flow?
Yes. Yes, we can
So
see
this is
it.
the cash flow statement. Earlier on, I mentioned the cash flow is grouped into three. We have cash from operating activities. And we have cash flow from investing activities and cash flow from financing activities. One of the key measure of liquidity situation is the cash flow from operating activities. At the end of the day, it tells whether during the year did the activities generate cash or we used up cash. And that tells whether the business has money at the bank or it doesn't have money at the bank. That is, for me, is one of the measures that I look at all the time when we prepare the statement of cash flow. Have we generated enough cash from all the activities that we carried out during the year? Cash flow from financing activities would also help you to know whether the company is dependent on bank loans or is internally generating enough money to be able to take care of its needs. So, yeah, I think that would help.
All right. Okay, we hope that that also works for Ebenezer Mensah. And because of time, we'll just take a final question. We are far behind time, so we are supposed to close at 5 p.m. And so we'll take our final question and then we can wrap it up for today's session. So Francis Arthur is asking a question. He says, I think there's a difference between accountants and finance professionals. And he's saying that whilst accountants may have a fair idea in finance, they are, however, not financial analysts. Okay, I think that's a contribution he's adding, that they are, however, not financial analyst professionals. Probably, Grace, you want to add something to his contribution.
So I think earlier on I mentioned that in the past, a lot of people had boxed accounting professionals as accountants, but accountants have evolved in now analyzing information, and that process has birthed financial analysts. For you to be a good financial analyst, you should be able to understand your numbers. And in understanding the numbers, you prepare the numbers, you're able to then use it and make informed or help stakeholders to be able to make informed decisions. So, yes, we have people who are pure accountants doing debit and credit, but to be able to grow in your career, you have to evolve from just being a debit and credit a person doing accounting into an analyzer where you analyze the financial information for decisions to be made from there. That is where the impact is. Yeah.
All right, that is where the impact is. Probably those of us on the call who are in the positions of probably becoming a chief finance officer one day, or probably growing in our career towards the accounting and finance area. You want to also learn more and not just be an accountant, but evolve into a financial analyst. All right, so thank you very much, Grace Awoche, for your time. I'm sure that most of our listeners here, including me, have learned a lot today, known a few things that we can use in our various organizations and field. And so thank you very much. Please don't sign off here. We want to take a few announcements. And most of us have also some questions we want to ask and some contributions, but time will not allow us. But this topic and many other topics and modules are treated in our Certified Strategy Professional course. In that course, probably you can have a very interactive session with our facilitators one-on-one, engage them on all the issues you may be facing in your organizations. They are going to give you in-depth business strategy and how to make strategic decisions in your organization. And so you probably want to consider joining our next cohort for the Certified Strategy Professional course. Our next cohort starts on November 15, 2025. We probably have just some few weeks, like 3 to 2 weeks, to start the next cohort. And so you want to contact us if you are interested to register. You want to contact our hotline, which is 0244 268672. 0244 268672. You want to join that. It runs for 10 weekends. We have both the in-person and then the virtual options. And so if you can't do in-person some weekends, you can join the online. And we give you the liberty to alternate between these two options. So you don't necessarily have to be stick to one option. Every weekend, you decide which option to go for. And so for 10 weekends, we study business strategy and how we can thrive in our various organizations. So that's our Certified Strategy Professional course. But for more information, you contact our hotline 0244 268672. We also have the Executive Leadership Program, which is an executive training in leadership. And the next cohort is just starting just this Monday, November 3. It's a 5-day program. So November 3 to November 7, we have this program starting. It's an executive training purely in leadership. And so you also want to consider that it's 5 days, 4 p.m. to 8 p.m. each day. We also have both the in-person and the virtual options as well for the executive leadership program. And so you can also contact our hotline, which I just mentioned, if you also want to join that for more information and probably for all the details you need. And if you also want to join, you contact 0244 268672. All right. We are also very active on social media, on all social media platforms, on Facebook, LinkedIn, Instagram, on TikTok, across all social media platforms. You can search for us, Institute of Leadership and Strategy, or our username, ILS Executive. Search for us, follow us to get more educative content. This webinar is a free webinar. We give free knowledge we give to our followers, and we do this once every month. And so once you follow us, you're going to get updates on when next our webinar is coming up and any other programs we have upcoming that you can benefit from. So you can kindly follow us on social media and get updated with any other program as well. We are also located at East Legon, just behind GT Bank. East Legon, just behind GT Bank, Lagos Avenue Stretch. Otherwise, the Menswick Hotel Stretch, you can find us there. That's the Institute of Leadership and Strategy. All right, so thank you all so much for joining the October version of our webinar. Thank you for joining. I hope that it has been a fruitful session and you've not just wasted your time joining, but you've taken one or two few things to go and thrive in your various organizations. And so we'll come your way same time next month and we'll bring you the November edition of the ILS webinar series. And so we'll draw the curtains here and we'll say bye for now. Let's all have a good evening.
Are you planning on moving your career to a strategic and policy-making position, or perhaps to the C-suite executive level? If that is the case, then you need to start thinking from a strategic perspective. For you to influence the policy of an organization, to shape the vision and align culture of an organization, a strategic mindset is imperative. Welcome to the Institute of Leadership and Strategy and to our executive certification in strategy. This course will tremendously increase your value, impact, and managerial career and prepare you for senior leadership roles. For 10 weeks, you will interact with captains of industry and key strategy experts to develop skills to lead organizations, to deliver on strategy, and to achieve exponential growth. You will understand strategy at the corporate, business, and functional levels and acquire skills in strategic planning, strategy formulation, and strategy execution. Sign up for our next cohort and join the over 500 managers and professionals who have gone through our executive strategy development. The course runs for 10 weekends with in-person and virtual options. We look forward to holding great conversations with you as experienced strategy experts and facilitators share deep corporate insights on business strategy with you. See you in our next session.